Gold and silver have been, what they've done is they've sold paper contracts against gold and against silver that don't exist. We're going to move into a failure to deliver scenario. And when that happens, man is a funny animal. When you tell man he can't have something, he wants it that much more. Silver's still got slight backwardation. But I mean, all the lease levels, all the borrow rates, everything's elevated. It just reeks of a massive short squeeze.
So this is really interesting. And when you come to SLV, which has a $4 billion short interest, I think $4.5 billion short interest, they've lost control. The LPMCL, the cartel, the four banks that run that cartel are clearly behind that borrowing SLV to sell it. They've lost the plot. I think it's time for them to really short cover.
Gold and silver markets are moving into a decisive phase as physical demand overwhelms years of paper-based price suppression. Elevated lease rates, rising borrowing costs, and persistent backwardation signal that structural pressure is building beneath the surface. Paper contracts that once dictated market pricing are losing influence, while physical buyers, from sovereign entities to private investors, are directly purchasing real metal from exchanges. With supply deficits running for 5 consecutive years and global production barely reaching $30 billion annually, these markets can no longer contain the growing wave of capital searching for a reliable, non-defaulting store of value. Bill Holter, a longtime precious metals analyst, and Andrew Maguire, a veteran market whistleblower, emphasize that the physical market is taking control as prominent short positions unwind. Their outlook highlights a potential failure to deliver environment in which trillions of dollars in capital fleeing stocks, bonds, and crypto may overwhelm the limited capacity of gold, especially silver. They note that fear, not speculation, is becoming the dominant motivator as investors exit vulnerable financial structures and move into assets that cannot be bankrupted or printed. With silver's industrial, medicinal, and technological utility adding further strain, the setup favors a powerful revaluation driven by physical scarcity rather than paper trading. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Gold was overbought. Silver was more overbought than it was in 1980, back at the peak. And what you've seen with both of them are high-level consolidations. The paper trade is waning and the physical market is growing. The physical markets are growing. Just look at what the BRICS are doing. I mean, they're opening storage facilities, refineries. They're very serious about accumulating both gold and silver. And it makes sense because, you know, for years and years, they had, I guess the metaphor is tons. They had tons of dollars on their books, and now they're adding tons of real money on their balance sheet. Well, obviously, price tells you that they're losing control, but let's not even talk about price. We did mention that we're in a structural deficit. We've had a supply and demand deficit for 5 years, and that's what happens when you get a small market size-wise as far as dollar amounts. I mean, the total production globally is only like $30 billion a year. But when you get a small market that's easy to manipulate, and if you're constantly manipulating to the downside and suppressing the price, what that does is it makes it much more difficult for producers to earn a profit, so they mine less silver. So, you know, a direct consequence is the fact that we're in a structural supply deficit. Other things to look at, you can look at the lease rate on silver. You can look at the lease rate and the amount of shorts available on SLV, which is strictly paper. That's not actual physical silver. But the rates to borrow, it's blowing the shorts. The shorts are being blown up. I've said for years that on gold and silver, the numbers that we're going to go to are higher than anyone has projected of any number for gold or any number for silver. The actual number, I'm convinced, is going to be far higher than the most optimistic projection there is. And the reason being, Gold and silver have been, what they've done is they've sold paper contracts against gold and against silver that don't exist. And we're going to move into a failure to deliver scenario. And when that happens, man is a funny animal. When you tell man he can't have something, he wants it that much more.
Yeah.
And I mean, you're talking literally trillions of dollars that are going to be dislodged from the stock market, from the bond market, even from the crypto markets. And all that money is going to be pointed toward gold and silver. Those markets, I mean, especially silver being so small, they cannot handle the type of capital that's going to be heading toward a safe haven or these safe havens. And one other aspect of man, fear is the greatest emotion there is. People are going to be moving money into gold and silver, not out of greed because, I could buy gold at 50 and I can sell it at 100 or 200 or whatever. That's not going to be the motivator. The motivator is going to be fear of losing everything in other markets and putting that money into something that is a safe haven and cannot bankrupt. That's the whole key. They can't bankrupt in a world that is defaulting. Silver's got many, many uses. It's not just industrial. I mean, you've got technological, you have medicinal. Go back hundreds of years. You remember the term, he was born with a silver spoon in his mouth. Well, only the wealthy people could afford silverware. And the reason they used silverware was because the antibacterial
properties.
Properties of silver, right? Exactly. Gold is basically strictly money, and silver for several thousand years was also money, but it has other uses. It has more uses than any other element on the planet. Silver's got many, many uses. It's not just industrial. I mean, you've got technological, you have medicinal. Go back hundreds of years. You remember the term, he was born with a silver spoon in his mouth. Well, only the wealthy people could afford silverware. And the reason they used silverware was because the antibacterial
properties.
Properties of silver, right? Exactly. Gold is basically strictly money, and silver for several thousand years was also money, but it has other uses. It has more uses than any other element on the planet. The other thing with gold and silver, you've got the two markets. You've got the paper market and you've got the physical market. And for years and years and years, the paper market acted like the tail on a dog that wagged the dog. In other words, paper markets made pricing. They priced the market. The problem now, because with COMEX and with LBMA, you have buyers that are lining up to take physical off the exchanges. The problem is they can't print gold and they can't print silver. The only thing they can do is print contracts that, when all is said and done, they cannot perform, which makes them worth zero. So all I'm getting at is the physical markets are taking over here. Silver's still got slight backwardation, but I mean, all the lease levels, all the borrow rates, everything's elevated. It just reeks of a massive short squeeze. But understand this, you're using the casino analogy. Understand this, the casino itself is bankrupting. So what you need to do is you need to cash your chips in now, get those chips out of the casino and out of chips. You got to convert your chips into something real. And that's basically, you need to convert your fiat currencies to gold and silver. Because the analogy of the casino being bankrupt, you've got sovereign treasuries all over the world that are upside down.
Escalating pressures within the silver market are revealing the limits of years of paper-based price management as physical shortages, export controls, and tightening supply chains collide with record short interest. massive SLV borrowing, rising lease rates, and shrinking availability indicate that the old system of relying on just-in-time deliveries and suppressed pricing can no longer function under current geopolitical and industrial strains. With new export restrictions from both China and the US, the global flow of refined metals is constricting at the very moment demand from technology, military production, and energy applications is accelerating. The physical price hubs shifting toward Asia highlight where true price discovery is now emerging. At the same time, Western shorts remain trapped in an intensifying squeeze driven by limited inventory and rising replacement costs. Under these conditions, the path forward points to materially higher silver prices as markets are forced to reconcile paper claims with the reality of absolute metal scarcity. Let's get back to the interview.
So this is really interesting. And when you come to SLV, which has a $4 billion short interest, I think $4.5 billion short interest, they've lost control. The LPMCL, the cartel, the four banks that run that cartel are clearly behind that borrowing SLV to sell it. They've lost the plot. I think it's time for them to really short cover. Trump's visit to China, or Trump's last assault on China or threats at China, basically came, well, it just happened to coincide. I'm not connected to the two. It happened to coincide with the free fall that came. And it maybe was a coincidence, but essentially there is, not only did China come out right after that, and we talked about rare earths and one thing and then put export controls on some things, including silver. And then the US immediately retaliated with similar controls. But this has been going on by stealth for a long time. We know that there's been these kind of things going on for a long time. But it's out in the open now. So now you've got less supply coming into the market. You've got the inability to really plug bearing in mind, if you were shorting SLV, if you were this LPMCL, you were shorting SLV, you relied on the status quo. You relied on, we can just about handle it. We make sure we deliver Nokia, Samsung, all these guys just on time. And as long as they get it, screw everyone else. We've got control. And so obviously they make sure that there's always enough to fulfill those large orders, which would become, if these guys didn't get it, they'd go out to the market and they'd literally buy enough to make sure their assembly lines never shut down. And that would be the end of the cartel. So, but the interesting thing is, that status quo was in a long time. Now the silver hub, the price setting silver hub, is no longer in Loco London, and it's no longer in the CME LBMA's grip. And they thought they could keep this game going. And now all of a sudden, you've got export controls from both sides. They're caught in a hell of a short squeeze here. I don't think this is history. To me, this is history in the making. And anyone that doesn't view silver, even at $50, as an unbelievable bargain is going to miss. They're going to kick themselves. Be a bit like Bitcoin when it was $1. You're going to wish you'd made the move. And this is, to me, at this point here, when we're talking, and it's only just happened 2 weeks ago that these things, or even a week ago, that these controls really kicked into play. Of course, there's going to be a massive short squeeze. So someone has to go and buy a lot of silver just when there's little silver. So this is, to me, is a really hell of an opportunity. Who would have thought silver would there'd be export controls, global export controls on silver, military reasons. We've got a warlike situation. Nobody thought this would happen. They thought it was just something you could play with forever and a day. Under these conditions, and they will not cease, because we got a very warlike world going on right now, and everyone wants to build missiles, and you need a lot of silver for AI, and so multiple reasons why you need silver. It's to me, this is the moment when they have to try and go back to market. What are you going to do? You're going to print money to pay back these positions because you don't have the physical. Whatever you do, ultimately somebody wants the physical, so you have to somehow get the physical. I honestly believe that were 80 to 140 bucks before this even gets halfway set. Personally, I think just speaking to my liquidity providers and saying, well, it's not there. So it's got to be bought. If the price hub being the physical price hub is being set in the SGE and including the free trade zone, SGEI, Western facing hub, if that is where the price is going to be being set, then you no longer got control. So how much, at what price will you're going to have to buy it at market. And yes, they can probably hide the fact, or they'll maybe get a bailout. You can get bailouts, and I'm sure there'll be many a bailout of banks that we've seen in the past, because you can't have that whole thing collapse, the daisy chain collapse. But it still means buying silver. It still means covering that short position, even if you have to print the money to do it. The case of turmoil, whether it's another financial crash referred to, which is probably inevitable, or something as awful as we've just described, you need something to barter with. And your pounds, your euros, your dollars. I mean, you probably need a wheelbarrow before anyone says, well, I can't eat it. But silver is recognized all over the world. It doesn't matter. Gold and silver are recognized all over the world. So there's a value to that. So if I want a job like a trench digging, and I don't have a chicken to offer in reserve in payment for that, because it's ultimate barter is silver.
Yeah,
it's small enough to actually use as a currency that people will gladly accept, that they then can go to a food shop and swap for food. That, in other words, you can bring the system back again, even though it might be in a very small initial way. And she talks about community. She talks about trying to create interdependence with your family, your friends, and making sure that you go to a farmer's market, learn how they farm and all that kind of. So I think it's all part of, think we should all be thinking. I think, you know what? Why wouldn't we do that? Why wouldn't we take responsibility for ourselves? We do it when we buy. When we swap fiat for gold and silver, but also, what if we need it? And I think this is kind of an action call to me. It's an action call to anyone watching this. It's like, have you got enough? I mean, do you really think that it's not a good idea to hedge all this bullshit? Who's setting the price? The price is being set in China. There is sufficient gold liquidity. I mean, look at silver separately, but there's sufficient gold liquidity, 80,000 tons. And I'm not the only one that thinks that. There's so many people that liquidity providers I speak to say with monetary gold that's been accumulating since 2010, it's 80,000 tons, unequivocally 80,000 tons. So when you've got that much gold and talk about rehypothecation, and you've got the US with 8,100 tons of, it's probably there, but how deeply rehypothecated is it? You now control the market. So, and if you've got 80,000 tons, you don't have to think, well, I need a lower price to buy more. No, it's time to exercise your muscles. Now, when someone like Trump comes in and says, right, we're going to tariff you, we're going to squeeze you on this, squeeze you on that, whatever. They just turn around and say, well, no, we're setting the gold price now. So the higher the gold price, the more we're insulated from you, buddy. And it's now being set there. And I think the point I'm trying to make is the gold pricing hubs are no longer in the cartel's hands. This is the interesting part about it, which has to be good for the mining stocks and everything, which have been shoved into this volatile, toxic mix.
Growing tension in the precious metals market is becoming more visible as traditional pricing mechanisms lose influence and physical shortages take center stage. Export controls, shrinking inventories, and aggressive short covering are creating conditions where suppressed pricing can no longer be maintained, while industrial and military demand increase sharply. Rising lease rates, constrained supply flows, and an urgent need for real metal are amplifying volatility at a moment when liquidity is thin and global trade relationships are shifting. As the strain deepens, the possibility of large forced purchases grows, pushing the market toward prices that reflect absolute scarcity rather than synthetic leverage. This transition marks a structural break in how the silver and gold markets function, signaling a period in which fundamentals outweigh manipulation and physical demand sets the direction. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.